The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap, and we've got green on the screen. The S&P 500 up slightly as we see the broad market index gain 0.2%, closing at 5,623. The Nasdaq Composite also higher by 0.2%, closing at 17,755. And we have another new record high for the Dow Jones Industrial Average, 10 points higher, or around 0.02%, so squeezing out a small gain to close at 41,250. For more insights, we are joined by Michelle Schneider. She is the Chief Strategist at marketgauge Group. Michelle, good morning. Thanks for joining us on the show again.
Thank you for having me, Ryan.
Always great having you on, Michelle. It looks like we've got investors looking forward to a couple of things. And of course, I think the big one is the earnings coming through from Nvidia. And we have the stock up 1.5%. So it seems like a lot of optimism is starting to get priced in right now.
Absolutely, and it is quite the event. I'm hearing that people are actually planning watch parties during Nvidia here in the U.S., I guess, with their martinis in hand. But essentially, the expectations are for a very lofty 75% increase in revs from Q2 to Q3. So that could be priced in. The question will be, is it going to be a sell the event type of situation as opposed to keep buying it on the way up? And it's hard to tell at this point. No one's going to deny Nvidia is solid, but the question is how much more can they go at this point going forward, given certain scenarios that have emerged with concerns of chip shortages and things like that.
Yeah, how does someone play Nvidia right now? Because it had a pretty good run in the past year. Year to date, it's up around 166%. Are you looking at any levels to ride the momentum?
Well, yes. I mean, at this point right now, I would love to see a dip closer to about 118 as a potential buy opportunity. I don't know if I'd be looking at chase here. And I would imagine that a lot of portfolios have positions in it. We certainly do. 136 is a level that I see. That is the July calendar range high. That's why we picked that level. And if we go past there, of course, then we're looking at the all-time highs possibility. And there's no reason why it can't go there. But bet in the entire market on one stock, of course, really I think is remiss because it's leaving out some of the more interesting things that I see going on right now in other places of the market.
All right. Watch out for 118 is at around 128 right now. So talking about the wider market, that's where I think the consumer comes in, and that picture around the U.S. economy. You've got the consumer sentiment in the U.S. at least rising in August. Where is it going from here, Michelle?
Well, that was quite the surprise, and I think a lot of it has to do with the fact that people believe that the highest inflation is long behind us now. And if anything, of course, there's concerns about disinflation. We're a little bit skeptical about that, and we can talk about that in a moment. But getting back to the consumer, it doesn't seem like the accumulation of credit card debt or higher costs are really affecting them. And, of course, seasonally, we're at the back-to-school time, which generally comes with a lot of buying. So as a result of all of that, we think, A, that the buying right now is nothing compared to what we're going to see as we enter 2025, and that'll be a whole new market based on people who have successfully lost weight on the diet drugs, on the obesity drugs, and I'm calling that the vanity trade. But this the vanity trade, because it's going to be all about me, people who have not necessarily done the things that other people would do because they've battled with obesity, not having to deal with that anymore, could go out, right, and buy makeup and skincare and cosmetic surgery and Botox, and then, of course, we go to hair and fashion and possible athletic wear. That's what I think that's going to explode in 2025.
Yeah.
But for right now, I'm sorry, go ahead, Ryan.
Oh, I was just wondering about the I guess, contrast with what we've been hearing from some of the consumer companies who have been reporting consumers have been tightening their purse strings.
Well, yes, what they're doing is basically changing the spending habits. I think that's really what you're seeing. But if you look at the charts and you look at, let's say, XRT, which is the retail ETF that has staples and also discretionary. That's looking like right now, if it takes out the recent highs, then that's going to be a boon. And actually Nordstrom's, by the way, reported after the close today. That's a big chain store here in the States. And that's up 10% in the after hours because of better than expected. So whatever you hear about the consumer, they're still out there spending money. And it looks to me like either the consumer discretionary ETF XLY could go, but we have our eyes right now on XRT. And of course, the biggest thing is if that actually does take out the recent highs, what does that mean for the rest of the market? And that has to be only a good sign.
All right, Michelle, let's dive into a couple of your stock picks right now. And you've got Rivian EV maker in focus. What's the story here?
First of all, in terms of the tariffs that are being put on China, Rivian is not impacted by that. And they went through their earnings, and obviously they're still losing money, but of course that doesn't necessarily always equate to stock share prices. And it seems like the stock has based out, and I'm seeing more and more Rivians around, and they're going to be making some good changes in terms of costs and then also in terms of different types of cars that you can buy, because right now they have a truck, and that's pretty much it. So we love the stock here as it's holding between $13 and $15. We are positioned in the stock for disclosure, looking to add if we can take out 15.
All right, that's Rivian. And you've got property in focus as well, SLG or SL Green. So this comes into play as we see potential rate cuts on the horizon.
Yes, exactly right. And interestingly enough, with all the talk of recession and disinflation, we have a situation where home prices continue to go up and there's still a lot of demand. And so once these rates come down, what we can see is people are hungry. They've been on the sideline waiting to buy homes with lower interest rates. And that's why that particular stock, which is SL Green, SLG, is looking very, very good right now on the charts.
Okay, let's turn our attention to some of the other stuff you've got on your radar. And this, I think, is an ETF. It's Block, B-L-O-K, and it has to do with data.
It's blockchain technology, right? So it's basically a ledger, and it's very efficient and supposedly impenetrable for any kind of hacking. And it's a technology that really has been around now for a while, but it's something that we look at future-wise, it getting even more influential in terms of how business is done. And BLOK, as you mentioned, is the ETF, again, has been consolidating at great levels here. We're looking for it to get over $40 and possibly even go on to making new all-time highs, which is closer to about 60 that we haven't seen now in the last couple of years.
All right, a couple of great ideas for you to look at in the markets right now, and also a good overview of where things are for investors to keep an eye out for. And we've been in conversation with Michelle Schneider. She is the Chief Strategist at MarketGauge Group. Michelle, thanks for your time and insights today.
Thank you so much, Ryan. You have a great day.
Have a great day too, Michelle. Always great chatting with you. Stay Money FM 89.3.